Good afternoon. Myself, Dr. Needu Gupta. My topic, banking and negotiable instrument. I wanted to tell about the origin of World Bank. According to some authorities, the World Bank is derived from the word bancus or banque, which means a bench. Some authorities opinion that the word bank is derived from the German word bank, which means a joint stock fund. Nature of banking. A bank is a financial institution that provides banking and other financial services to their customers. A bank is generally understood as an institution which provides fundamental banking services such as accepting deposit and providing loans. Banks are a subset of the financial services industries. Almost in any country, bank represent main pillar of financial stability. Beside financial intermediaries, banks play an important role as national financial institution in everyday life. The banking sector offers several facilities and opportunities to their customers. All the banks safeguard the money and valuable and provides loans, credits, and payment services. Development of banking. The bank also offers investment and insurance products as a variety of models for cooperation and irrigation among financial industries have emerged. Some of the traditional dis- distinction between banks, insurance companies, and securities firms have dismissed. In spite of these change, banks continue to maintain and perform their primary role accepting deposits and lending funds from these deposits. Banks are institutions which provide and hold liquidity sustainable flow for all other financial and non-financial institutions. Though the monitoring and controlling of the banks, central banks can sustain and provide impact of countries' financial situations. Functions of banker, accepting deposits. The main functions of bankers is to accept deposits from the public, which are the current account and for a fixed period. Higher interest rate is paid on fixed account than on current account. Entries relating to deposit received, amount, withdrawal, and interest paid are made in the passbook issued to the client. The second function of bankers advancing loans. The second important function of bankers to provide loans against security of land, jewelry, crops, goods, loans are given to known parties on the basis of the promissory note. Loans given to the security of land and building are based on mortgage registered with registrar of the area. Discounting hundies. Discounting hundies is an important function of the banker. They write, buy, and sell hundies, which are also called bill of exchange. Remittance facilities. The other function of bankers also provide remittance facilities to their clients, and this is done by writing a finance bill to their branches. If they have at other place or to some other indigenous banker with whom they have such arrangements. Now I'm talking about the kinds of banks. So, firstly, the main kind of bank, central banks. Central bank is the biggest bank of the banking system. Its main function is to issue currency known as bank notes. These banks act as a leader of the banking system and bank and money market of the country by regulating money and credit. These banks are the bankers of the government. They are bankers' bank and ultimate custodian of a national foreign exchange reserves. The aim of central bank is not to earn profit but to maintain price stability and to strive for economic development with all-round growth of the country. Commercial bank. The second other function of the banks is a commercial bank, and the main functions of the commercial bank receiving money on deposit, lending of money, transferring of money. Functions of bank. Now I'm talking about the functions of bank. The bank performs different functions. It accepts deposits from the customer who can take back their money at will. A saving bank also pays interest to customers on their deposits and is also popular with small serves. Customer can leave their cash with the banks as a saving account, current account, and a fixed deposit account. Now I'm talking about the saving banks account. Customers deposit their money in saving bank account to save a part of their current income to meet their future needs and also intend to earn an income from their savings current account. On the other hand, is running account which may operate upon any number of times during the working day. There is no restriction on the number and amount of withdrawals. The bank does not pay any interest, rather it takes incidental charges from the depositors on such account in some cases. Fixed deposit account. Deposits are made for a fixed period and a high rate of interest is paid to the depositors. A bank lends money to needy people at a certain interest rate. Banks give loan of agriculturists, industrialists, and businessmen who invested in their ventures to their own profit and to the economic advancement of the country. Other functions of bank: the collection of check drawn on a bank on other bank, the acceptance and collection of bill of exchange, dealing in foreign exchange, stock exchange, safe deposit facilities, making standing other payments, supplying change, law relating to banking companies and control by government and its agencies. In India, banking companies are regulated by Banking Regulation Act 1949 and Reserve Bank of India Act 1934. Regulatory regimes exercise its control on banks in following phase. Reserve Bank of India decide the rate of interest change on loans. Reserve Bank of India decide the rate of interest given on FDRs, which is usually higher for the senior citizens. Reserve Bank of India decided the SLR, which is a commercial bank, has to maintain in order to control the expansion of the credit. Negotiable Instrument Act. The Negotiable Instrument Act is come into the existence in 1881. This act is enacted to define and amend laws relating to promissory note, bill of exchange, and check. This act is applicable to whole of the India, including Jammu and Kashmir. This act came into force on 1st March 1882. Features of Negotiable Instrument Act: it should be in writing, freely transferable. It should create a per right of a person to receive money and corresponding liability of a person to pay money. Transferability: holders title free from the defects. Promissory note. Section 4 defines the promissory note. Meaning of promissory note: a promissory note is a legal financial instrument issued by one party promising to pay the debt on to another party. Definition: a promissory note is an instrument in writing containing an unconditional undertaking signed by the maker to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Parties of promissory note. Parties of promissory note maker. The person who makes the promissory note and promise to pay is called the maker. Pay. The person to whom the payment is to be made is called the pay. Some essentials for the promissory note. The promissory note must be in writing. It must contain an undertaking to pay. There must be an express promise to pay. The promise to pay should be unconditional. The promissory note must be signed by the maker. The sum payable must be certain. The instrument must certain a promise to pay money and money only. Other important points regarding the promissory note: the maker and payee must be certain. Stamping on promissory note is essential under the Indian Stamp Act 1899. An unstamped promissory note is not admissible. It must contain a date. The limitation period of a promissory note to file issued in 3 years from the date of the execution or from the date of the acknowledgement. Bill of exchange. Section 5 defined the bill of exchange. Meaning of bill of exchange. Bill of exchange can be understood as a written negotiable instrument that carries an unconditional order to pay a specified sum of money to a person or the holder of the instrument as directed in the instrument by the maker. The bill of exchange is either payable on demand or after a specified term. Definition of the bill of exchange. A bill of exchange is an instrument in writing containing an unconditional order signed by the maker directing a certain person to pay a certain sum of money only to or to the order of a certain person or to the bearer of the instrument. Some other important points regarding the bill of exchange. A bill of exchange must be drawn unconditionally, though the acceptor or the endorser may make his liability unconditional. Directions of the payment by the drawer must not be made to depend upon a contingency. Therefore, it is the essence of a bill of exchange that it should be payable at all events and it must appear so on its face. It is essential that a bill of exchange should point out with certainty the party who enters into the contract imported by its term. It must indicate a drawer who should be called on to accept or pay it. Check. Section 6 defines the check. Meaning of check. Check refers to a negotiable instrument that contains an unconditional order to the bank to pay a certain sum mentioned in the instrument from the drawer's account to the person to whom it is issued or to the order of the specified person to the bearer. It also includes truncated check and check in electronic form. Definition of the check. A check is a bill of exchange draws upon a specified banker and payable on demand, and it includes the electronic image of a truncated check and a check in the electronic form. Some other points regarding the check. It is always drawn on a specified banker and it is always payable on demand. Essentials of the check. A check must be an order in writing, unconditional. A check must be signed by the maker. The amount must be specifically mentioned in the figure and words. A check may be drawn payable to order or bearer. There are two kinds of check prevailing nowadays. They are, it may be a bearer check, it may be a sales check. Acceptance. Section 7 defines the acceptance. Meaning of acceptance. The acceptance of a bill is an indication by the drawing of his asset to the drawer of the to the order of the drawer. Section 7 states that an acceptance is the signature of the drawing of a bill who has signed his asset upon the bill and delivered it. Thus, an acceptor is the drawing who has signed his asset upon the bill and delivered it to the holder. Essentials of a valid acceptance in writing. Signature by the drawee or his agent on the bill of exchange completed by the delivery to the holder. Writing the word accepted is immaterial. An oral acceptance or writing the word accepted without the drawer's signature is not an acceptance. Section 8 defines the holder. The holder of a promissory note, bill of exchange or check means any person entitled in his own name to the possession thereof to receive or recover the amount due thereon from the parties. His right and title are dependent on the transferor. He has a right to demand or receive, but he has not a right to sue. Some other points regarding the holder. It is not every person in possession of the instrument who is called a holder. To be a holder, the person must be named in the instrument as the pay or the endorsee, or he must be the bearer thereof. A person who has obtained possession of an instrument by theft or under a forced endorsement is not a holder as he is not entitled to recover the instrument. An agent holding an instrument of, for his principal is not a holder, although he may receive his payment. Holder in due course. Section 9 defines holder in due course. A holder in due course is one who received the instrument for consideration without notice as to the defect in title of the transfer in good faith and before maturity. What is endorsement? Meaning of endorsement. Endorsement means signing at the back of the instrument for the purpose of negotiable. The act of signing a check for the purpose of transferring to the someone else is called endorsement of the check. If no space is left on the instrument, then the endorsement may be made on a separate slip to be attached to the instrument. Definition of endorsement. When the maker or the holder of a negotiable instrument sign the same, otherwise than as such maker for the purpose of negotiable on the back or the face thereof or on a slip of paper attached thereto, or so sign for the same purpose a stamp paper intended to be completed of as a negotiable instrument. He is said to be endorsed the same is called the endorser. Thank you.